It's still in the conversation because of its dominant position on base, the real trading volume and TVL it continues to process, the V incentive design, and the simple fact that any protocol acting as the central liquidity layer for a major L2 still draws attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on Aero. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You will see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Aerodrome than for lower ranked names because of its ranking and role of base, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached during previous base and DeFi runs. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Here's the real debate. Is Aero actually undervalued at these levels, or is this a value trap after a large post-run decline? One side points to the real volume and liquidity it provides on base, the vote escrow incentive model, the fee generation, the distance from previous highs, and the idea that L2 liquidity hubs could re-rate if capital rotates back into base or DeFi infrastructure. They argue that if usage stays strong and the emissions flywheel continues to function, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many DeFi tokens tied to specific L2s that peaked during strong narrative runs have struggled to hold value once attention faded. Volume and momentum have been soft for long stretches, emissions dilution remains a factor, and the market has consistently treated Aero as a lower priority name despite the underlying activity. What's going on with Aerodrome Finance right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Aerodrome Finance is the primary decentralized exchange and liquidity hub on the Base network. It uses a vote escrow model similar to Velodrome, combining an automated market maker with emissions incentives and governance through locked Aero tokens. Liquidity providers and voters direct emissions to pools, while traders generate fees that flow back into the ecosystem. Aero is the native token used for emissions, governance via vAero, and participation in the incentive flywheel. It currently ranks near the top 100 by market cap with solid daily volume, and the price has been trading near the levels you are seeing after a sharp decline from previous highs. That's the classic trap setup. The technology is real, the protocol continues to process meaningful volume on base, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here. Buying the base liquidity hub will eventually matter argument, while the larger trend remains downward or sideways. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Aerodrome can convert its position as base's primary liquidity hub into sustained demand and relative outperformance for the Aero token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Nobody knows which way this resolves. The chart is still fighting the technology narrative, the protocol continues to process meaningful volume on base, and the market remains selective about which L2 DeFi stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher, or are we just watching another established L2 liquidity token settle into a prolonged period of low relative interest while people argue about valuation? Risks are meaningful, volatility is still present. A broader risk of move in crypto or continued rotation away from mid-cap DeFi and L2 tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term basis central deck story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure micro caps, but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any emissions-based DEX. The narrative has to keep generating real volume and demand, or the token simply fades under ongoing emissions pressure. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to base and DeFi. Aerodrome continues to dominate liquidity on the chain. Fee generation supports the ecosystem and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform.